Talk to us about this 28% increase in revenue, because we've seen overall the chip sector be somewhat decimated, the demand-supply flip reversing, and yet you manage to be pushing higher when your clients are falling. What's happening?
We're very happy with the quarter that we've just had. Our revenue was up, as you said, 28%. We saw an increase of 60% in our licensing business and 12% in royalties. But more importantly, we've seen a significant diversification in our business, Caroline. Our business around the cloud has been up double digits. Our business in automotive, probably triple digits. This diversification strategy is not new. We started it a number of years ago, but we're just now starting to see the fruits of that labor as the power efficiency of which ARM is known for is finding its way into the data center and all EVs.
Can you give us some targets around the focus on data centers, automotive, PCs, rather than just the smartphone sector?
You know, these areas are places where the growth has been very significant in the last number of years, and we made a very conscious decision to focus on these new markets, particularly with new products. Our Neoverse line for servers, adding functional safety to our automotive products, and as a result, we've seen huge benefit from that. Every major cloud provider now has ARM instances in the cloud. AWS, 48 out of their top 50 customers are able to use ARM. And in electronic vehicles, we're seeing companies such as ST, Renesas, Mobileye, NVIDIA, all shipping silicon into automotive.
Rene, good afternoon to you. Look, as Caroline said, you bucked the trend. I want to dig into this idea of how you continue to grow when your customers don't. Is this an issue of lag, that what the rest of the chip sector is going through, you are not yet experiencing, but will experience later on in the year?
We're no different than the rest of the industry. We certainly feel the effects of the slowdown in certain markets, but we are buffered to some extent. As I said, we've seen significant growth by gaining market share in the cloud, gaining market share in automotive. In smartphones, where it's been well documented there's been a slowdown in that industry, we've actually seen some very good results, and that's been due to kind of two main factors. One is our version 9 architecture, which carries a higher royalty rate, which means more value for us. But also, more importantly, we're just seeing more technology inside these smartphones, more processors that find their ways into all different areas of the application space, means more CPUs inside the smartphone, which again means more royalties for us. So we've been able to be buffered to some extent in that space and seeing growth really across all our markets.
Okay, how confident are you that those outliers of performance that you've just flagged can continue throughout calendar 23?
You know, who can be really confident these days in terms of predicting where the market's going to go, Ed? But we're very confident in the long-term secular trends that are good for ARM. And that is, number one, more compute. And number two, that is more power-efficient compute. Again, when you look at the data center, when you look at automotive, these are areas that really need a high degree of compute, but they need a high degree of power efficiency. You know, another number that really surprised folks last quarter was a record number of shipments by the ARM partners, 8 billion chips that were shipped by our partners. And that feeds a cycle of more and more people who are developing software on those 8 billion chips, which feeds into more demand. So I think the quarter-to-quarter perturbations, you're always going to see those relative to what's going on with inventory and such. But we are very confident that the long-term secular trends that we're seeing in the industry are very good for us.
Someone else is confident around you, and it's SoftBank. They're confident that the IPO will be done by this year. Are you doing a dual approach? Is it London, New York? Do you have a time frame for us?
I can say that we are fully committed to an IPO in 2023. There has been a lot of planning underway already on this. We've been doing a lot of work. Regarding location, listing venue, I can't talk about that. No decisions have been made there yet.
What needs to be cleared up? T's crossed, I's dotted, when it comes to a relationship, for example, with Qualcomm ahead of the initial public offering? Of course, there's been a dispute there, one of your key clients. How is that progressing?
You know, I can't comment on the litigation there, Caroline. I have to leave that up to our legal team. You know, I can say, though, that we are very confident in the case, and we think the court will ultimately agree with our position.
Rene, I want to talk about China a little bit. You know, ARM is all about the underlying technology, the intellectual property, chip designs. How impacted are you by US and allied efforts to cut China off to access to the latest in chip technology?
Like any other company, we comply 100% with whatever the U.S. government comes down with vis-a-vis export controls. Because we actually don't make anything physical, that is, what we deliver is intellectual property, i.e. the license rights to build a product with our designs, we're not so directly impacted by some of the recent rulings, which really impact more people who are actually building the chips, either chip companies or fab equipment makers or the fabs themselves. So we have some level of indirect impact, and we comply whenever there's something that we need to comply with vis-a-vis law, of course, but given where we sit in the value chain, not so directly impacted as some of the other companies might be.
As we discussed, your technology is present through so much that goes into consumer electronics. Your designs are sort of integral to the chips that go into smartphones. But the hot topic, the area in vogue, is artificial intelligence. Is ARM competitive in that field in terms of the chips that it's designing? And I know that you work closely with some big tech names that are doing more in-house chips in this area.
Yeah, I'd like to say we're far more than competitive. You know, there's a lot of AI that runs on ARM already. When you think about inference at the edge and any kind of artificial intelligence that's being run there, that's all being run on ARM. They're being run on ARM CPUs. There's been a lot of buzz, in the industry, and certainly even today, regarding generative AI and ChatGPT and such. That's going to mean even more demand for ARM technology. When you look at the trade-offs between the workloads that run on the CPU and the workloads that run on accelerators, there's room for some of this acceleration to take place in both areas. I think the area where we're going to really perform well in this space, again, is around power efficiency. These new AI algorithms are incredibly compute intensive, and in a world where we just don't have that much energy to throw at the problem, having energy efficient processors to assist and offload is going to be critically important.
And just from your global perspective that you have at ARM, can you tell us just where US sits in the race vis-a-vis the rest of the world, in particular versus China, for example, when it comes to artificial intelligence?
Well, certainly the U.S. is investing very heavily in this, and you just saw the announcement that took place today with Google and Microsoft. I don't know if I'm an expert to comment on where the U.S. is versus other geographies, but it's very, very clear that artificial intelligence, whether it's a Spotify playlist or wherever it is finding its way into our lives in many more ways than people can realize, and I think it's only going to increase.